Hello, Tenny Tolofair here, co-founder and director of acquisition at XSITE Capital. Are you concerned with high inflation and high interest rates? Well, me and you both. Today's discussion will be about the impact of high interest rates on multifamily and our acquisition as a company going forward. Multifamily may be less impacted than other commercial real estate asset classes as the Fed attempts to slow down rising inflation. Inflation right now is about 9.1%, highest that we've seen in a long time. But there's still growing concern about the higher cost of debt capital, tighter underwriting, lower pricing, and disappearing deals. We're seeing that a lot as a company. We're not seeing a lot of these currently. With inflation running at the hardest level in 40 years, Wall Street is bracing for the possibility of interest rates rising even higher than previously anticipated. The rise in interest rates, which began with a 25 basis point hike by the Fed in March and continued with a 50 basis point increase last month in June, has already resulted in a shift in the behavior due to concern about where rates are going to land in the next 12 months. Economists now see to third possibility that the Fed will increase rates by a full percentage point at its meeting that's coming up in July 26th and 27th of this month. That would be the steepest increase since the 1980s, coming after a 0.75 basis point rate hike last month that was the sharpest increase since 1994. Now, here are some key items to note as you think about these increased interest rate hike and inflation. Cash flowing multifamily and industrial assets wouldn't be severely impacted by this. These are also properties that continue to see significant rent growth in operation. While rising mortgage rates may not be good for those seeking to buy single-family homes, the demand for multifamily and single-family rentals are expected to strengthen along with rents, according to the National Association of Realtors chief economist Lawrence. The rise in interest rate and volatility has led to a sharp uptick in the cost of funds for both borrowers and lenders, meaning that lenders are reducing leverage primarily out of the concern of refinanceability. Lenders have also tightened their underwriting standards, resulting in lower loan to value, which means that operators like ourselves will need to bring significant amount of equity to the table in order for we to take deals down. And this would potentially affect the investor's yield because of costs of debt. There is also an anticipation of a big shift as some owners take their properties off the market for the next several years if they can't get the price they would have gotten just a few months ago, which will affect acquisition in general across the space due to lack of inventory. But those who need to sell will have to sell because they have no choice. And they are going to get a lower price based on that. The housing market has significantly slowed down considerably in the past month as interest rates continue to climb. We expect that this slower pace will remain throughout the summer months, but buyers will return later this year if the Fed's plans are better understood by the market, and that will lead to less volatility. And people will be able to start doing transactions at that time. But another important note to take into consideration is that those who purchase properties with high leverage and have upcoming maturities within the next couple of years that are tied to volatile indexes, those individuals and those operators, they are going to be forced to sell their properties. And at that time, a lot of operators that are ready and they are highly capitalized will be ready to take some of these distressed property down. In conclusion, though the overall transaction volume has slowed down across the space, the fundamentals of multifamily and commercial real estate are still very strong with high demands for apartments. We at XSITE Capital will continue to evaluate several opportunities with the hopes of presenting a great opportunity to our investors now and in the nearest future. Again, thank you so much for joining, and please like and share the content if you find it very valuable. And please share with anybody that you think will benefit from it as well. Until next time, take care and thank you for watching. Bye-bye.